From the morning reading, oil, energy sector stocks jump as OPEC agrees to production cuts. Financial steel stocks rise as broad market pulls back. Breadth weakened compared to the prior session as decliners led 1838 to 1192 on the New York Stock Exchange and led 1783 to 984 on the Nasdaq. On the S&P 500 snapshot, we were down 0.27% for the day, but up 3.42% for November. The S&P 500 popped at the open and hit its 0.43% intraday high about 15 minutes into the session. The rest of the day was patterned with zigzagging downward to its negative 0.27% intraday low at the close. On a brighter note, the index posted a 3.42% monthly gain, its best since its 3.56% July advance. The sell-off in treasuries resumed. The yield on the 10-year note closed at 2.37%, up 7 basis points from the previous close and an interim high, the highest close since mid-July 2015. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:05 a.m. Mountain Time, and I am recording this in preparation for the market day of December the 1st, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. At the time of this cut, the indices for the U.S. are mixed, with the S&P futures down just below scratch, the Russell futures just above scratch, and the Nasdaq and Dow futures down just below scratch. Crude oil builds on its huge move yesterday, up 1.56% in last night's overnight. Euro up about 1/3%, bonds down about 2/3%, and gold down about 1/3%. China up about 0.7%, Hong Kong up about 1/3%, Japan up over 1%, Germany and the United Kingdom down over 1%. In terms of macroeconomic reports for today in the United States of note, we have unemployment claims, weekly variety. I have ISM manufacturing, and a whole bunch of yellow flag reports. Looking forward to tomorrow, we have the monthly employment report. That's your big one. And then FOMC member Brainard speaking, and FOMC member Tarullo speaking. So that'll take care of your week there. In terms of current volatility conditions, short-term VIX, highest it's been in a while, 13.23. Skew also just above warning threshold at 126. IV percentiles, perhaps a bit higher than they've been in recent sessions. The S&P at 20, the Russell at 25, the Nasdaq at 14, and the Dow at 19. Keep in mind, those are all still very, very low on an annual basis. In terms of standard deviation moves, we didn't have any standard deviation moves put in yesterday. So, I was thinking we might have had one, but that's what it says right now. No standard deviation moves were put in on a close-to-close basis with yesterday's price action. And let's go ahead and bounce over to the charts. And the S&P futures, and you can see we made an intraday new all-time high on the S&P, but then backed off pretty sharply and then closed near the lows of the short-term support area. Now, obviously, we've been rolling over a little bit, so kind of weird action here where you kind of do a false breakout to the upside, turn, and then close down near the lows. The overnight action has actually taken us through those recent lows, and we're currently just below, or actually, I could say we're just on at the time of this publishing I should say the time of this recording, just on those lows. So we'll see where this goes when the cash market opens and all the cash participants come in. The primary area of interest, of course, is the prior area of resistance now should be turned support. And do we come down and test this area? And then where does it go from there? Does it fall back into the prior range? And this all ends up just being a false breakout on a kind of an overshoot of the election? Or does this, which is the highest probability, become support and it's just nothing but a bull flag consolidation pattern from this huge move here, a little bit of consolidation, retracement, and then on and up to a new higher high? That would be the primary expectation. In terms of the Dow actually has been a slightly more bullish pattern. We also yesterday set a new all-time high, actually had a green candle on yesterday and a very small overnight action. So Dow in the number one place in terms of relative performance at this point. Now, NASDAQ had an ugly day yesterday, and while the prior session came up within, I think we said it was about 20 points of the all-time high resistance ceiling, it has backed off pretty hard yesterday, and mostly on things like Google. You can see here, big red candle yesterday on Google. Facebook, also relatively poor performance. But Apple, it was down, but not quite as dramatic as perhaps Google. Something to keep in mind there. But anyhow, some of these big titans in the tech sector certainly had ugly days yesterday, and that affected the NASDAQ for sure. So big picture, it's still neutral. It's still kind of basically halfway between the range highs and lows, and it's right smack in the middle of the cloud. So don't get too excited about what this means on the NASDAQ at this point. Of course, the Russell also, we talk about potential overshoot action, and with yesterday's action on the futures, it actually closed just below the prior channel, and right now price action's back in that channel. So this would seem to be nothing more than an overshoot, and then now back into the channel. Now, it could, of course, bump along the top of this channel, much like it did here, and still stay very, very strong bull, or we may see something more of a more significant retracement, and certainly coming back here to the 1265 area, while in terms of number of points would seem pretty dramatic, it actually would be a very, very normal retracement in a big bull pattern, come back, some third or half of that pattern. In terms of other markets, crude oil, of course, has been marching with the dramatic news from OPEC. It was just a couple sessions ago, we were at 44.82, and currently we're trading well up over 50 and heading towards the 52.22 all-time high. I should say 52-week high. Obviously, it's been much higher than that all-time. So we're basically a day or two away from being able to test those levels. So kind of keep that in mind. And gold seems to have been breaking down again. And the overnight did test lower. And right now is trading at the former swing low areas. So this would seem to be another bear flag breakout. And of course, this is all related to the dollar. And yesterday's action on the dollar had us, looks like it broke out bull flag. And then just barely though, and today's action seems to be down inside. So has not yet confirmed that breakout yet. And then bonds continue to break down. Look at that now, 150.01. Don't get in the way of a falling bond until proven otherwise. If you're going to take anything long in bonds, it's got to be for very short targets, very much counter trend. And if you look here, any kind of leg up in bonds, ever since we hit the top in the middle of July, any leg up has been exceptionally short. You had one here that managed to go from we'll call it 165 area up to about 170, moved about 5 points up, but all the rest of these legs since July have been more like a point or two before legging back down the next leg. So definitely getting hurt in bonds if you are long. And in terms of volatility, we're still in that kind of just noise, general 12 to 15 bull market kind of area. Nothing really here to get excited about. Let's go ahead and move over to the daily report. And some changes here, mostly in the lower part of the report. We're still market phase 3, still have the primary expectation of bull flags as our primary pattern. Obviously, that's bullish. In terms of the 3 market timing signals, the first one coming to us from IBD, confirmed uptrend. That's bullish. GMI index, a perfect 6 out of 6. Buy signal in place since 11:10. That's bullish. And then the third one, stock charts decision point scoreboard. No change from yesterday. So we're left with the short term all bulls, intermediate term majority bullish signals, and long term mixed signals. So overall consensus here is that we have an improving, strengthening bull market. And the consensus clearly to the bullish side, but don't forget that we do have these mixed signals in this intermediate to long term, so it's not yet a healthy bull market that would be characterized by a series of higher highs and higher lows, a true trending market. In terms of the position sizing opinions, so both models pointing at 100%, intermediate term market postures, all severely strong bulls on all 4 indices. They've backed off of their kind of most recent high levels, but anything above an 80 still retains that severely strong bull characteristic, and the whole thing is supported by a weak bullish sentiment line. So retracements are expected to be mild and short-lived to the downside in a bullish sentiment line type environment. Hedge warning status level 0 plus, normal with some elevated conditions, most notably those decision point scoreboard intermediate to long-term mixed signals. Strategy opinions, no change from yesterday on this. Still acceptable opinions being issued on all 3 of these strategies for the initiation of new positions for novice traders, and still calling for somewhat of a defensive structure with respect to covered calls with a 1-to-1 ratio of in the money, out of the money strikes, and a 1-to-1 ratio of low beta, high beta. In terms of the current warnings, we could see and you should pay attention not just when it's in warning status, but how often it's in warning status. We had with this 2 sessions ago, it was market in decline and sharp increase warning, and then the session after that they came off, but now they're right back on. So definitely experiencing a little bit of increased volatility here in this recent few sessions, but also, it certainly isn't being rolled up into all the other areas of yet. So we have some early change, but the rate of change certainly hasn't gotten particularly exciting. Distribution day count on the NASDAQ does remain high. The skew does remain just above the 125 caution threshold. But trend-based areas, everything looks fine there. In fact, we even had new highs yesterday at 345. And key intermarket risk aversion indicators all still show risk on, though they are showing some early signs of rolling over still. And the sentiment is at 73, so while close to being into the extreme area, isn't quite there yet. So in terms of sector specific, big news, of course, for energy with the OPEC news. Also financials doing well, materials doing well, though general weakness throughout the rest of the sectors, and you see pretty wide breadth to accompany that activity. Big days in the prior sessions for utilities and consumer staples and real estate, and they basically gave it all back with yesterday's action. See, healthcare continues to show weakness. And indeed, we're starting to see more polarity now with the sectors, with consumer staples, healthcare, utilities on the downside. But then on the upside, you have things like transportation and certainly financials, industrials, materials have been holding up fairly consistently with all three time frames in the bullish camp. Percent change, see energy with the big winner yesterday from OPEC, financials and materials. Everybody else pretty much falling back behind that. Okay, I think that's probably enough for today. And I'm going to scroll slowly through these. If you see something of interest, just hit the hyperlink or type that hyperlink into your browser, and that'll take you to some additional information. Disclaimers as always. Hit the pause button if you need more time to review the disclaimers. Also know the hyperlink at the bottom for the full set of disclosures. We'll be back here next for tomorrow's market preview session. In the meantime, manage that risk and seek to learn something about your trade and investing activities each and every single trading day. Goodbye.